Well, silver and gold would be my main piece of advice. I think if you don't have real money, which is what gold and silver are, you should get some, because the cash that you've got in your bank account and under your mattress and wherever else, that will be devalued by the government necessarily. They have no choice but to do
Right.
that. So, as the base layer of your financial life, you want real money.
Hello, everyone. Thanks for joining and welcome back. Our guest today is John Rubino. He is the founder and editor behind Rubino.substack.com. He has over 20,000 subscribers, and we are super grateful to have you down. Welcome, John.
Hey, Ivan, it's great to meet you.
Yeah, it's great to meet you. This is your first time on here, and I wanted to get you on to talk about everything that's happening in the economy, all the financial instability, gold, silver, everything that's happening in the markets. But first, I'll start off with the financial collapse that people have been talking about so much recently, and is it coming on the horizon? How can we get rich while protecting ourselves, John?
Well, we are taking on insane amounts of debt, and we're monetizing that debt. So we do have a financial crisis coming, in which the big currencies are the epicenter. They're the things that lose value, and the things that depend on them, like bonds and bank stocks and things like that, also lose value along with the currencies. So what you want to do, first of all, to protect yourself, you want to get out of financial assets as much as possible and into real things, because governments, they can make an infinite quantity of currency and therefore bonds, but they can't make any more copper or gold or silver or uranium. So you want to move from financial assets over to those real things, which will tend to hold up just fine. They have utility. They're not going anywhere. They're very rare. We have to go get more when we want more. And that will make those things relatively valuable going forward. Physical gold and silver, if you don't have a lot of that already, you kind of missed the boat on gold, or at least partially. You missed a nice big move in the last few years, but there are more big moves coming. So the silver story is a little better than the gold story right now because it's relatively cheap. And some of the energy metals like copper and uranium are, they have dramatic futures ahead of them. So you want to own the shares of the mining stocks in those spaces. And if you do things like that, you'll basically be okay. You'll sail through the financial crisis without a lot of drama.
Yeah, you absolutely nailed it, John. Now, there's a lot of talk online about, what's happening with gold prices. Is it like what you were just recently alluding to? Is it the financial debt that's increasing? Is it Fort Knox not having the gold there? I know Elon Musk and you had Trump coming out and saying we need to audit Fort Knox. And is the gold really there? What is happening with gold? Is hitting new all-time highs? What are your thoughts there?
Well, there's been a lot of stories over the last couple of years to attribute or to account for gold going up the way it has been. First, it was central banks buying. The central banks of the world have decided that the dollar is no longer going to be the world's reserve currency, or that it will be one of several, with gold being the other big one. And so they've been buying gold really aggressively, and they're not really price sensitive. Central banks can create as much currency as they want to. So they're able to buy gold on a scale that nobody else has been. And so that probably accounted for a big part of the move from 2020 to 2024. And then just lately, it's gotten really interesting with, first, um, there was gold moving out of London and into New York because of the Trump tariffs. People were
Right.
afraid that if they didn't repatriate their gold now, they'd have to pay a big surcharge to get it later. So they moved a lot of gold from London to New York. And then, like you said, the Fort Knox thing happened, and everybody now is thinking that a lot of the gold buying that's going on in New York is to put the gold back where it belongs in Fort Knox before Trump and Elon Musk get there, and at the same time, you've got a lot of gold being taken off the COMEX in physical form, because
Yeah.
normally the futures markets, people just play games with the price of a commodity, but they don't actually expect to take the commodity when the futures contract expires. They just settle in cash. Well, now people are settling for gold. In other words, they're demanding physical gold, and that's kind of tapping out the big exchanges. They operate on a fractional reserve banking system where there's paper equivalent of 100 times the actual physical metal sitting on shelves in these warehouses. So if just a handful of extra people want physical delivery, there's a risk of bankrupting or at least causing a default in these metals markets. And that would be spectacular if it happened. You know, you would see panic buying like you've never seen before if the COMEX defaulted on a gold futures contract.
Oh
And
yeah.
that's a very real possibility in this world.
Yeah, oh yeah, it's there's been a lot of talk and a lot of guests that I've had on recently. They're just saying like, anything can pop at any moment, especially if like what you were saying, if the Comex defaults on all of its deliveries and yeah, that would be a sight to see. Another question I wanted to ask you, John, is, what's concerning you right now in the markets other than silver and gold and everything we've talked about recently, and even bonds. What's the main concern of you for you in the markets right now?
Well, equities are wildly overpriced. So we're looking at the very real possibility of an equities bear market at a minimum, which would be like another 10% down now on the S&P 500, or something much more serious than that. Because, again, we're taking on so much debt. And that is requiring that so much new currency be created, and that runs the risk of accelerating inflation, which means people want higher interest rates before they'll be willing to borrow or to lend money into these sovereign debt markets. These higher interest rates do two things. One is they threaten to bankrupt governments because governments have to pay a higher interest rate on their bonds, and that spikes interest expense. Like in the US, we now owe like what, $1.5 trillion a year in just interest.
That's
That's,
crazy.
yeah, that's devastating for governments. And if interest rates go up because of that, that's devastating for stock prices too, because stocks trade on lots of different factors, but one of the important ones is dividend yield versus what you can get in the fixed income market.
Right.
And if interest rates go up to 2 or 3 times the dividend yield on the S&P 500, why would you take the risk with stocks when you could get a bank CD that pays 4.5%, while the dividend yield on the S&P 500 is 1.2% or something like that. So
Right.
that leads to a repricing of stocks dramatically if it stays this way or if interest rates go up from here. And that's a real risk. And an equities bear market leads to a recession, which in the case of a really overvalued or over leveraged economy like ours, doesn't have to stop at garden variety recession. It can metastasize into something much worse very easily when a lot of the leverage speculating community starts going bust. So we're running that risk too. So it's
Yeah.
wild times in the financial markets.
Yeah, it is crazy. And what would be your main advice to people that are younger who are finally waking up to inflation, waking up to their dollar being devalued, and there's just new people, whether they're old or young, you just new people into wanting to protect their dollar. I know they can protect it with silver and gold, but what would be your main piece of advice for them, John?
Well, silver and gold would be my main piece of advice. I think if you don't have real money, which is what gold and silver are, you should get some, because the cash that you've got in your bank account and under your mattress and wherever else, that will be devalued by the government necessarily. They have no choice but to do
Right.
that. So as the base layer of your financial life, you want real money. So go get some silver coins right now. That's the quickest thing. I mean, silver is not screamingly cheap anymore because it was like
No.
$33 an ounce just lately. But relative to gold, it's pretty cheap. The gold silver ratio is still around 90 or maybe 85 right now after the last couple of days.
Right.
And that's usually a buy signal for silver. That's a high, that means you have to pay 85 ounces of silver to get an ounce of gold. And that's a relatively extreme reading that says silver is undervalued. So for your base layer of money, go get silver coins wherever you can get them. I noticed that there's a lot of people wanting to sell their silver now. So
Really?
ask around. Yes, yeah, because they've been holding on for so long.
Right.
There are people who bought
They've been holding
silver.
for 30 years.
Well, I have some friends who bought some silver back in the 1990s and 2000s, which that's multiple decades now where they've just been sitting on this. And the price is up slightly from what they paid back then, and
Right.
because of that, they're thinking, well, okay, I got a small profit. I'll just take that small profit, and find somebody like that and buy their silver at a price that's less than you would have to pay with an online dealer or something like that.
Yeah.
And then, from there, especially if you're young, Fortunes are made in shorting bubble markets in equities if you time it right. And this might not be a bad time. Well, actually, 2 weeks ago would have been a better time, but this still might not be a bad time to look at some ways of shorting. Go watch the movie The Big Short to get yourself excited. And then understand that we're back in one of those markets. We're in a bubble market where life changing fortunes are going to be made by betting against the highest priced assets. So if you're 29 years old and you've got 40 more years of work ahead of you, you can afford to roll the dice and do a little shorting. And so buy some long dated put options on some of the big stocks that are out there now, or the NASDAQ or the S&P 500. And then just see if you get that crash, that quadruples your money in 2 weeks.
Oh yeah,
Things like that'll happen.
whoever was shorting Tesla recently from its all-time highs,
Yep.
that would have been a good time.
I've been shorting Tesla on and off for the last 5 years and finally gave up. So of course, this is now when it crashes.
Now when it crashes, he's like, "Ah, I gave up too long ago."
Timing is everything when you
Yeah.
short things, because
No.
you need to be right reasonably soon, or else you're in trouble.
Oh yeah, absolutely. You might lose your pants. Well, John, it's such a huge pleasure having you come down here and speaking to the silver and gold community.